Good morning, everyone, and welcome. Happy month end. Hey, Raj. Nate, how are you? Good stuff. 100-degree heat. Wow. Where are you, Nate? And welcome to the folks on YouTube. Hey, Adam. Arm Deep, how you doing, guys? It's 100 degrees in Chicago. Wow. Amazing. And we thought it was warm here in the UK, eh, Raj? Jeez. I guess it's time to go to the cottage or the lake, right? Don't worry, the 4th is coming. You guys can start getting into holiday mode now, right? Oh man, I love the 4th. It's always such a good time in the States. So what are we doing with this kooky market? Oh, goodness, goodness, goodness. Well, we're kind of stuck, folks. We're kind of stuck. When markets do what they're doing right now, when you got to get big, big gap up, you know, there's a big gap, and so this gap is not, it's not creating any nice price action. We had a little liquidation yesterday after I got off stream. But you'll notice that that liquidation came right to where those single prints were, right to exactly where we were expecting that. Then the overnight action, I think we have another poor low, right? So, a couple of things real quick. The lows are getting higher. Today is month end. Tomorrow is the last trading day of the month. So that means today is what they call T plus one for equities. So trades that happen today in equities will settle tomorrow, which is Friday. Friday is what we used to call in the old days market maker month end because market makers have to provide liquidity all day tomorrow. And retail and other traders mark the end of the month today. And we can't seem to get a break on liquidation. There's This is like when you go into those Rolex stores and they tell you there's nothing for sale, then try to get you to pay more. So I've heard from my friends. I've never tried to buy a Rolex. Um, yeah, the market's playing hard to get right now for the shorts, and it's creating really crappy price action. There was a little bit of better trading. I mean, yesterday when I was on, it was slow, and there was like nothing to do. And then later on in the day, we got a few decent trades, but nothing really worth writing home about. And you don't really expect that around month end. So let's take a look and see a bit of a closer look. Overnight inventory is long, right? We are creeping right up to the last stop and the previous day high of yesterday. Sorry, I've got to get this in the right place. Blow that out. Yesterday's high is up here. And so market profile, I don't know if you guys use this in candle trading, but this is the concept of, if you look at the half hour, this is basically just a half hour, fancy half hour chart. We are one time framing up, which means the lows get higher, then you correct inventory here, and then the lows get higher again. This is just a fancy way of saying trend up. So on liquidation breaks, like here, when you trend up and then you break that trend and then restart trend. This is just what they call an inventory correction, right? And it catches a lot of people because they short down here and then they get trapped, right? Same here, right? It is. Hey, Doc. Exactly. That's a good way of putting it. Doc just said one of the best controlled price moves that he's seen. Irritating perfection. It is irritating. And that is why they switched from humans to electronic execution. Because a human being could not build such a beautiful chart. I've tried, because people get emotional. And they emotionally buy or they emotionally sell or they make mistakes. Algos don't make mistakes. And neither does electronic execution. It is irritatingly perfect. And it just keeps trapping people. And the worst part about electronic trading, until you actually wrap your head around it, is that slow, jerky movement is not weak. And just when you think it's going to fall apart and you short it, then it goes up 2 points on you. And you're like, wait a second, right? It looks like it's going to, like when we were bouncers, we'd watch drunk people try and get up the stairs. And he's like, he's not going to make it, And the guy would get to the top of the stairs, you know? It was just, and it's exactly that kind of price action. It's irritating, right? It's absolutely irritating. The other thing is there's a little bit of a telltale sign that it's month end and shorts are trapped. You see this period that they call J period? Usually it corrects inventory lower. And it does that in RTH as well. When it doesn't, when it goes up, that's a little bit of a sign that we've got a short, trap shorts in the market. That's one of those things. Um, See, here it didn't really see it corrected inventory a little lower. It corrected in I. It corrected earlier yesterday, and it went right to where we said it would. That 61.30 and a half. It stopped one tick before. So that's telling us the shorts are trapped. And they came in here, then they came in higher to buy, then they came in higher. There's that poor low in the overnight session, right? We had a poor low in yesterday's overnight session. That broke. So let's see if we get any liquidation when London opens. Should be interesting. Asset prices always get marked up into the end of the quarter with the big if. If the order flow, if the flow of customers, right? If that is, if that is present, right? And it's working for you, then you can mark up prices. So order flow is just the flow of customers coming into the market. So how do we trade this? Now, yesterday, I was telling people, don't overtrade, don't do this, don't do that. One of my guys, he sends me this chart, and I think he had done 300 trades, and I was like, were you joking? Did you seriously do this? Right? So maybe I should do the opposite. Tell people to do 200 trades, and then they won't trade. I don't know. It was funny. I was like, Did, didn't you just like, didn't I just talk to you to tell you not to do that? Well, that's life. You have a bad day, pick yourself up, go again, right? That's just, that's just, oh, man. You got to really see. The thing is, as a person who's worked in this market, right? As somebody who's been in the business for 33 years, there is nothing about this price action that makes me want to trade it. So I got a question for you because I'm learning, okay? I'm learning how to teach. I'm trying to teach you guys, but I can't teach you guys unless I know how you think. So I need some help, right? If I look at a chart and I go, that's the last thing, I wouldn't touch that with your money. What makes you guys trade like that? Like take 40 or 50 trades or 100 trades? What's the, and I'm not saying this in a rude way, I'm just trying to I'm just trying to crawl inside your brain so I can help maybe unlock something to help you guys. Like if somebody tells you something and you do the exact opposite, what is it that makes you do that? Anybody have any insight? Hey, Johnny. What I'm trying to do is I'm trying to crawl into the mind of the retail trader, right? Because I don't think like you guys, right? We did a podcast last night with a guy who's probably one of the smartest dudes I've ever met. And he's the CIO, the Chief Investment Officer of Bitwise, you know, the Bitcoin ETF. And this dude did like, we got a poor high right there in J period and K period. Okay. So those sellers are still interacting. And he was one of the smartest guys I ever met. And he did say something. He said, listen, he said, people are not trained. People have such a hard time trading because they're not trained to think like distributors. They're trained to think like buyers, right? I'm just trying to crawl inside people's brains so I can help them. That might not be the best thing for me to do, but it just baffles me, right? When you tell somebody to do one thing and they do the complete opposite, right? There's got to be a way to get in there and reverse it. Okay, Travis, my brain does this. I will make my money back by doubling my size and taking a few points. Oh, okay, okay, okay. Oh, thanks, Raj. Okay, interesting. Yeah, I'm just trying to make it less painful, you know? Like when you see somebody going through pain, and if you're not a sociopath, right, you kind of want to ease their pain, right? Ease the suffering. So that's all I'm trying to do, right? Month end is the worst time of the month for retail traders because you know why? The agenda, right? The agenda is so unclear to you guys because you've never worked in the business, right? I'm getting some good feedback here. Thanks, folks. Right? So the agenda is very unclear. And this price action, do you see how weak it looks? But look, it's still going higher. right? Another new overnight high. We're right at that last stop. That's sort of the last stop. If we take that stop, it'll tag the previous day high. Boom. That is a stop run. Now, a lot of people will think that's a breakout and buy it. But is it a real breakout, or are the large sellers going to sell into it? You know? That's why I generally don't buy breakouts, because I used to sell into them. Because a breakout was a great opportunity to get rid of some inventory, right? You know, there's an old story from Jesse Livermore when everybody thought he was short a certain commodity. I can't remember if it was wheat or something like that, cotton or one of those weird things. And everybody thought he was short. So the next morning, everybody came in to buy to try and squeeze him, but he was long. So when they all came in to buy, he just let them have it, just sold right into it. Right? He was out of his position in the first half hour. Had a healthy profit. Right? It's it's a strange phenomenon. And honestly, I've learned more about retail traders and how people think from teaching them than I have from selling them stock over 30 years. Right? It's very it's a very interesting thing. And it's funny, one of our friends is a psychologist and she's a trading psychologist, and I called her a couple of weeks ago and I said, listen, we've got to do something about this. Can we help people before they blow up their accounts? Is there any way we can teach people to do things without pain? And she's like, no, they have to experience the pain. I'm like, really? There's got to be a way to help people. Okay, maybe one evaluation account you blow up because you don't know what you're doing, but there's got to be a way. Anyway, I'm searching for it. I'm still looking. I'm open to suggestions. It is. It's like the hot stove, right? Oh, come on. Put some sell into this thing. Jeez. So this is the price of something just being marked up. Who's buying? Anyone who's short underneath yesterday's high is now being forced to cover, right? There are buy stops here. That's what's being executed, right? Right here. That's what's being executed. Maybe I should remember we had that when I was back in Canada. We were gonna have JJ's boot camp where they come to the prairies in the middle of winter, and it's like 2 weeks, 2 weeks in Saskatchewan when you can't go outside because it's too cold. Maybe we'll do that. Yeah, I guess so, Phil. Anyway, I'm working on it. I'm not gonna give up. 31 degrees. Where are you, Danny? Guess the air conditioning companies are making big money this in Hungary. Oh, really? Jeez. Yeah, you can't do that anymore, Johnny. Right? You can't throw phones at people's heads. There's got to be a way. I'm going to keep looking. I'm going to keep looking. Got to keep looking. I'm not going to give up on this. Got to figure it out. So now we're distributing product from 60 to 62, right? We're using the trap shorts under 60 to hold the market up. And that's why the market, like, look how low volume there is, right? Exactly, right? As Johnny says, as a retail trader, we don't have anyone to tell us how bad an idea is or may be. And that's exactly true because when I was starting on the trade desk, our head trader, she she sat next to me. I had to sit next to her. And she was a character, man. She was the best. And her name was Denise. And sometimes I'd pick up the phone and start putting in an order, and she'd catch me. She'd 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 be listening, and next thing you know, she'd throw a phone at me or throw something at me and go, "Hey, hey, what the f are you doing?" I'd be like, "Well, the client told me," and she's like, "What do you just put down the phone?" And I'm like, "Okay, call you back." Right? We don't have that. We don't have any checks and balances, right? Hey, maybe with AI, I can like get the zero and one mafia to program something where the AI comes out and goes, I don't think that's a good idea. Right before you put in your trade, you get like a little compliance pop up that goes, yeah, maybe not the best idea to do that. There's got to be a way, right? Hey, let's use technology instead of fighting technology, right? All the old traders hate AI. They hate algos. They hate all that stuff, right? I'm like, hey, let's embrace it. Let's use it for the good. Yeah, stay at home. Like your wife is usually your best compliance officer. Yeah, professional kitchens and trading desks are very similar in the amount of abuse you take. See, look at that. See, it looks so slow, and then you short it, and then next thing you know, boop, right? This is the most frustrating, and if one thing you learn this morning, and I've been trying to teach this all week, is don't short month end, right? It's okay if you want to short it on a scalp, right, for a minute or two, right? But the chart will tell you when it runs out of selling, right? It'll say, okay, you can short for a minute, but don't go position short at month end. It is the worst trading strategy, especially at the quarter end, right? No, it's not purposely made slow. It's made slow because, Johnny, nobody wants to buy it at this price. So you have less customers in the store, but you don't have anybody selling anything because everyone is positioned under 6,100 going into the end of the month and the end of the quarter. So say you're managing $100 million and your speculative stuff is positioned under 6,100. You look like a rock star, and your clients are going to want to give you more money next month. So why would you sell anything? All you got to do is not sell, right? And the one thing I learned, and this is so hard, there was a deal. I had a client, we used to call him the freak, right? And he used to be one of the richest people in the UK and just one of the smartest dudes you'd ever meet. We called him the freak because he was insanely brilliantly smart. He actually created a market in another country, which shall remain nameless. Do you know how much intelligence it and requires to actually create an institutional market? He also did the first takeover of a foreign corporation in a company that never allowed it. Brilliant guy, billionaire, right? And then bad stuff happened to him, and then he came to me, and I was teaching him the penny stock world, and it wasn't hard because he was so smart. We had one deal of his that we took up to $300 a share, right? And we started it out at $3 or $5, and we just would walk it up because all of the stock was owned by a fund in France. So if they were having a bad quarter or a bad month, they would just tell him to tell me to mark the stock up. And I could move that stock literally $15 to $20 a share by spending $500 and telling my market makers to get out of the way. So in markets like this, you don't you don't have to have a lot of buying to move it up. All you got to do is not sell. All you have to do is not sell, right? People don't understand that most of the inventory is held in this market by large participants. And especially on a swing trade basis, if you're long at under 6,000 going into the end of this quarter, oh, rock star. You're a total rock star, right? And your clients, you know, they're going to be inviting you to the Hamptons, right? So that's something that a lot of people don't understand the mechanics of that. That's why they always short the end of the month. The market is controlled by the offer. The sellers create the market. Exactly. Right? So they will, that's why they call it market making. Right? Because you offer prices where people will buy your product. The goal is to sell as much product as you can at the higher prices, at the highest price. But at the end of the month and the end of the quarter, right, the goal is, or the agenda is to let asset prices get marked up. Now, who helps push price up? Trapped shorts. Trapped shorts are the best way to move a market up without spending a dime. You don't have to buy a dime of stock, right? All you do is sell down to a little bit and then stop selling. And anybody who shorted, then you lift the offer, they all chase it up. Yeah, I think we're going to have single prints, Raj. What do we got? 2 minutes? Unless we get back down under 61.58, we're going to have single prints, which means another short position right where we took yesterday's high, which makes complete mechanical sense, right? These markets aren't really tricky once you understand them. But unfortunately, what happens, exactly, trap shorts are all, a trap short is a future buyer, right? So the worst thing is to trade, is to try and short a market at the end of the quarter, right? Because all of these goons get paid on performance, right? And they all want to look good because if they don't look good, the money moves, right? What's going on next week, Raj? We got a 4-day week, right? I haven't looked at the news cycle. I probably should. All right, so we have single prints. Now we have another little short position here, right? From the top of that J period to there. So that's our short position. Now, what does that mean using market profile? This is one of the really cool tricks about market profile. 58 three quarter to 60 half is that's where the shorts are. So if you look, L period opened right there and then powered straight up, right, as London opens. Do I have month end wrong? Yeah, no, tomorrow is month end. Friday is month end. This calendar on my computer screws me up. I'm sorry. So Monday is the last day of the month, right? So, yeah, tomorrow is actually month end. Ooh, that's even worse before Friday. Sorry. When does tariff news come out? The last trading day of the month is market maker month end. And nobody corrected me on that yesterday. You guys were asleep at the switch. When I make mistakes, you're supposed to correct me. Did you? Sorry, Supra. I missed that. Friday is the 4th of July, so Friday the markets are closed. And it's one of the biggest holidays. So here you can clearly see with market profile the short position. I ignored you. I'm sorry, Supra. It was a busy day yesterday. I did about 6 or 7 one-on-one calls, and I think I was a little fried. Apologies. Yeah, I think I did the most one-on-one sessions that I've done in a day, and then we lost power in the morning for a little bit, so I was scrambling to catch up. My apologies. Oh. Okay, there's a swing high at 61.64 and a half. That's the only thing that's keeping us down. But it that could break very easily. So what I'm looking for now is for that point of control, which is where 70% of the inventory is priced. I'm looking to see whether they can take that and sell it up here. And that, you hear the word the POC moved up. That's all that means. It's very frustrating to trade a market when it's just, do you see how it's just kind of hanging here? There's no reference for you. So you're like right in the middle, right? Nothing to lean on. Do they deliberately trap shorts? No, John. Unfortunately, you don't have to. I mean, you don't have to deliberately trap shorts. People get short just because of human nature. Now, I used to deliberately trap shorts for a living in a stock, right? What I would do is, we'd take a stock from say $5 to $7, and then, we would sell it down from 7 down to 5, and then what we'd do and make that money, right? That $2 on millions of shares, right? And then what we'd do is we'd keep selling, right? And we'd tell people that that there's a bear raid, that the shorts are attacking us, right? So then, as soon as people find out that you're vulnerable, they'll start shorting, right? So then you pull your bids, right? And you sell the stock down to about $3, right? And then you buy everything, right? Because you've sold the stock all the way from $1 up to 7, right? So at 3, you sit there and you bid the crap out of it, and you let them hit you and hit you. Then what you do is you go and spread false rumors, right? Right? Like remember when Elon Musk went and smoked that joint on Joe Rogan? That was a short trap, right? CEO's crazy. Short more, short more, short more. Oh, somebody's doing a cheap financing and the stock's going to go down. They short, they short, they short. You buy it all at 3. Maybe take it down to 250 to make it look weak, right? And you get your bank, which is, your big investors. They buy everything, right? So you own everything from 3 to 250. Once you've bought back all that stock and all of that short stock, the next day you get up early in the morning and you tell your market makers to back off the offer you buy anything that they have pre-market, right? In their inventories. You clear out their inventories, right? So they're happy, right? Then you open the stock at 5 bid. So it gaps. So the previous close is maybe 320. The next day the stock opens at $5. Everyone's trapped under 5. They go to buy it, you move the offers to 550. They go to buy it at 550, right? They're short hundreds of thousands of shares. You sell maybe 10,000 shares at 550 and move the offers up to 570, right? Now you've got them good, right? You've got them good. You've got them really, really nice and trapped. Then you can take it wherever you want, right? By midday, you'll have the stock at about $8 a share. Everyone's trapped under 5. Once you get it over double digits, the world is your oyster. Because it goes from a 500 share market to a 200 share market, and no one's there for size, right? Oh, it's fun. There's nothing in the world like a good short trap, right? But you don't have to do it in a regular market because people will short the crap out of this all by themselves. Just human nature. So you don't have to deliberately engineer it. You know people are going to short it. So you just buy it all. And you don't sell it till much higher. And the thing is, everybody will say, well, it looks like it's been manipulated. The reason why markets look like they're being manipulated, because unlike retail traders, institutional traders are taught the same way. There's not one guy doing fibs, another guy doing EMAs, another guy doing Elliott and his waves, another guy doing, I don't know, Pokemon. There's not another guy doing this. We all are trained to do the exact same thing. So we think exactly the same way. We execute exactly the same way. That's why the market looks like it's being controlled, because on the other side of this, everybody is doing the same thing. You guys are doing all sorts of stuff, right? Right? You're doing moon cycles and, you know, DeMark and Gann and Fibonacci and, you know, fettuccine and all sorts of stuff, right? Footprint, nose print, you know, they give you all that stuff just to keep you guys confused, right? We all do the same thing. It's just like you grab some inventory and then, when the buying comes in, you raise price, they'll follow price up and you sell it to them. Big deal, right? That's why the market looks like it's being manipulated, because every institutional trader is trained the same way. We all think the same way, we all execute the same way, because we move inventory, You guys try and figure out those movements even though you don't even know what inventory is. 90% of traders don't even know what inventory is. So there you go. And there's your proof. Short position. And there are shorts trapped under every single low on the half hour bar. That's why when you get to those lows, there'll be a little bit of responsive buying unless there's a big sell order. This kind of, this right here, don't trade that. So for all you people like my guy yesterday who was like, I don't know, he was like a dog chasing his tail. Don't do that, right? Don't do that. Don't trade that. Trading that kind of a pattern where it looks like a barcode, that's like walking at Central Park at 3 a.m. with $100 bills falling out of your pocket. You're just looking to get a beating. Yeah, it's exactly all, Johnny. Market profile is just, excuse my language, a fancy ass 30-minute candle chart, right? It's a candle chart that you open up so you can see the inside of it, right? That's all it is. It's just a fancy half-hour candle chart. So if you don't have market profile, run a half-hour candle chart and mark the stops. I mean, I love market profile. It really helped me when I was learning how to trade. But as the market has evolved and changed and the range has gotten bigger, it's very hard to trade off of market profile. That's why I have that 1 minute candle chart. So the analogy I use is market profile is the map of the city, and the half hour or the 1 minute candle chart is a map of the neighborhood you're in. The top and the bottom of each 30-minute candle until it gets run through. Thanks, Tampa. I really want to make trading practical for people, right? So they don't, they're like, you have to do 10 years and 100,000 hours. And dear God, okay, if you understand the business, like when they teach you on a trade desk, you don't have that much time, you know. They give you a couple of months and they pull you off salary, right? No problem. Now, if we take that 61, 63 and a quarter high, right, there'll be some stops there, and that'll trigger some buying. Now, if it's a little bit of buying, the large sellers who are long under 50, 60, 61.54, they'll sell into it hard. If there's a lot of buying, they'll just sort of like sell into it softly so the price keeps going up. There's no reason to complicate this. People have been trading with a pencil and a piece of paper for centuries, right? Why would you overcomplicate that? You'll watch a level. When the market breaks over that level, comes back and tests it, you know that nobody needs to sell underneath that level, right? The only reason they have to sell underneath a level is because everybody's competing, right? So then you buy that level, you put your stop under that level, and then because we have charts, we know where to put our sell orders, right? I mean, some of the best traders I've seen in my life, like guys who are like, there used to be all these little market making firms, and there were some brilliant traders there, right? Just so fast. There was a friend of mine in California. This guy was, he was like, it was like competing against an algorithm before algorithms existed. He was one of the fastest traders I'd ever seen. He could make 30 markets simultaneously in 30 different stocks. He knew where he was on every single stock, where the inventory was, where the order flow was coming in, what orders needed to be worked, which or like he was just amazing. And I don't think he ever read a book in his life. uh, he was the most hated short seller in penny stocks. He was hated because he'd come onto a weak deal and just short the living crap out of it, right? Drive the price down. Oh, people used to hate him. For some reason, he liked me. I always got along well with the really bad villains. Let's see. There's that stop run you see. See? See how we stopped right one tick in front of that blue line? That's a swing high from way back, I think, in January, right? So we stopped right there. That's how precise electronic trading is. Now let's see if they sell into it. Oh, jeez. See? It looks slow, and then everybody goes to cover, and then rip. See, when they took that swing high, anybody who had a stop there got bought in. Anyone who doesn't have a hard stop there will now come in and start bidding the market. So you'll see some bids here as we come down and test this. These markets are so precise. The electronic trading, the 0 and 1 mafia, the people who program these algorithms and the execution models in these markets are so smart. I spoke to one of them yesterday. This guy was so brilliant, and you'll see on the podcast. He's a young guy, and he's a CIO, and I just sat back and let him talk, and I didn't even interrupt. I use like I usually do, right? I just sat back and just like let him fill my mind with knowledge. Brilliant, right? These cats on Wall Street now, it's insane how smart they are. Just insane, right? And they're writing the code and doing that for these markets now. So I'm looking for bids. Let me just move this right here, because anyone who's short under here now will put buy orders here. Now, if the shorts see a desperate seller, they'll drop their buy orders down to the previous day high. It was funny. We got off the Zoom call after the podcast, and I said to Ray, I said, holy crap, that guy was smart. And Ray's like, I know. He goes, I had to do a lot of homework to keep up with him. And I was like, man, Ray did such a good job on that podcast. We'll tell you when it comes out. I'm sure it'll be out today or tomorrow. But so sharp. I was just blown away by how smart this kid was. I call him a kid. It's disrespectful. He's just a young cat, and he's got it on lock. It's a beautiful thing to see. Okay, come on. No, don't be so shy with these contracts. Sell a little bit. Remember I said if those short sellers who are buying at 63, if they see selling, they'll drop their buy orders to take advantage of that seller. We need some liquidation, man. We really, maybe the president will say something a little kooky later on. That's really our only hope. Maybe he'll cuss somebody out. Ah, that was so funny. It was a couple of days ago he was swearing. I was like, he sounds like a head trader on a trade desk. Let's see if it's bid at 60, okay? Anyone who's short, look for buyers because the shorts are trapped under 59 and 3/4, right? See how it came down to 60 and it starts moving up? It stops just a little bit, right? That's because there are buy orders here, and those algos see that there are buy orders, and they're trying to get those buyers to chase the price up. See? That's where they stopped selling since we started. Right there. Yeah, let's see who insults today. Never a dull moment, right? Never a dull moment. Oh. Oh, you know what? I said it. Where is V? Does anybody have VWAP off the top of their fingers? Let's see if there's a seller. I'm thinking there might be a seller at 62, 62 and a quarter. There's 62. And the reason I'm saying that is just because the tops of these candles. There was a seller there before we had that little stop run. 51.8 is where VWAP is. Thank you. So there's some sellers at 62. Okay. We're going to try and move that point of control up. Right, and as the doc said, it's just annoyingly perfect the way this market has been built over the last couple of weeks. So all the buying here, this is all people who are short under yesterday's high, and they're coming into cover. So if you were a size seller, you know that the people are short. Anytime you get down to 61.60, you just stop selling, and then the market will rotate back up. Now, you don't even have to do anything now because it's all programmed, and the algorithms just they detect the order flow and execute accordingly, right? But they do it in milliseconds. You have to find the next swing high. I think it's up. I think the next swing high is at 61. No, we took out 61.64. Jeepers. The next swing high is at 62.38, and that's the back adjusted contract. So we're getting up into that area where, we had our previous high, our all-time highs. And which means the liquidation from February all the way down has been taken back. That's pretty impressive. Let's see if we can fill these single prints. This would be healthy now. If we come down and get back underneath the previous day high. Yeah. Yeah, the infrastructure of these US markets is something to behold. Other countries should really take note and study how the US markets are built. That's been a hell of a swing in one quarter, eh, Raj? What was the low? 48 something, right? Well, 49.14 adjusted for the new contract. All the way up to 61.60. That's a hell of a quarterly move. Cheapers. Oh, yeah. NVIDIA, sorry, let me just... if you guys want a quick look, NVIDIA firmly over that 149.60. My price target is 158.58. We'll see if we hit that going into month end. Um, just a thing of beauty, that stock. It's a hell of a buy at 89 bucks. Jeez. Right. And that circle, those who are watching that thing, look for 180. If it can't get back up over 206, we're going to drift down to 180. There's a block here and a block here. There's the main distribution block. It printed here, but and then they sold some here, they sold some here. So that's all beautiful distribution on that chart. Those of you who are interested in your new issues, I love to watch new IPOs and see how they trade. Here we go. One single print filled. Feel like Count Chocula here. Another one. See how it finds buying in the green box and starts to lift? Now let's see if this new period here can get and take those out. If it can't, it's going to rotate back up. Right? Well, not really that many trades tonight or this morning. Thank you folks for joining us. Really appreciate it. Be safe out there going into the weekend. And just, if you see a chart that looks like a barcode, avoid it like the plague. Right? Wait till you get some smooth price action. If you have any trouble at all, reach out. We're the tradingsyndicate.org. Use that 25% coupon code. DM me if you need any help. Right? And if you want to learn how to use those funded accounts, we'll help you with our friends at Apex Trader. Right? And just remember, folks, be long-term greedy, okay? Don't be short-term greedy. Be long-term greedy. Think like a villain, okay? Thank you, everyone. We'll see you in a little bit. Bye for now.